points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in December 10th, 2021, and the stock market is going to go down tomorrow. I am not holding back because this is what has happened every single CPI this year. So over the last 12 months, we're coming into the December report. This is going to be a very pivotal CPI, not only because the expectations are low, but because we've already got a whole year of data. So now, based on the market impact here, on average, 6 hours after the CPI release, we end up down at least 0.1%. If it is a good response, we could end up higher, but on average, we end up lower. So the CPI is coming out tomorrow morning at 5:30, about an hour before the market opens. That's on Pacific time, but this is very important because the market got a little bit jittery today as we got prepared for it. So today was a wild day. The S&P only dropped 0.5%, but the small caps in NASDAQ, it was pretty ugly, and now it's looking like tomorrow may very well be a crazy day. So we got a lot to talk about. I want to go over all of the other releases that we had because May was the worst one. That's where you got a 1.5 response, but tomorrow is going to be very key because what happened there in May might very well happen again tomorrow. So I got a couple plays that I want to go over. I did set up today. We got both calls and puts. I think it's going to be a good thing for volatility. Again, we're still going to have Powell next week, but tomorrow should be an opportunity. Now, it's Thursday. We've already had a lot of different watch lists. I just want to get straight to the plays because we made a lot of them. So I want to cover the strategy, and you can see what I'm holding coming into this, but let's talk about now what you're really going to see tomorrow. Again, why I'm relating this one to May, and this is what I'm going to be looking out for. I already have some guidance. You can see here today, the average estimate is 6.8% for tomorrow's CPI. The highest is 7.1, but today you got a rare tweet from Joe Biden about oil prices, who's kind of hinting at the CPI, and then before the Psaki press conference, there was, I forgot who it was that came on, but they were pretty much getting us ready, and they were saying that the oil drop or the drop in oil prices doesn't reflect this last data set. So it seems like it's going to be coming in at least higher than the expectations tomorrow. Anything below that will be good, but if it ends up coming in anywhere like 0.4, 0.5 higher and then starts going past 7, that is going to be a very negative response on the market. And now the reason why, and this reason could very well be a reason for the market to not go down as well too, but you got Powell last week talking about a more aggressive taper. The market was already worried about that, but now if we get a 7% or even something 7.4, 7.5, it's going to be very hard for Powell to not do anything but be hawkish, and then that may start some of those the taper tantrum talks again, and people might start freaking out. So we got a lot to look out for tomorrow, but the real kicker is if the estimate doesn't come in too high, then it may not be a bad response. Again, tomorrow very well could be an overreaction. A lot of people, given that we have Powell next week, whatever happens tomorrow, people are going to try to front run the Fed and get ahead of it, and that's why it's creating all of these moves. But essentially, if we get a report like last month, or if the market responds the same way, we really won't get that move. Essentially, what happened last time, it came in at a 5.9 expectation. We came in 0.3 higher. It was higher, but it wasn't enough to bring things down. The market actually dropped, but a little bit more than average. I mean, for the most part, we were up, but I believe it was like October. That's the one where we ended up doing nothing, but it was the same situation. We were pricing in 5.3. It came in at 5.4. Remember, from August to October, even a little bit before that, even like June, people thought inflation was slowing down. When it started hitting 5.4, 5.4 back to back, and then going down, people thought that it was going to start taking a turn, but then 5.4 was a little worrisome, and then last time we got 6.2, and that's why now, whatever tomorrow is, if it does come in higher than this 6.2, that will be a very deadly move for the market there, or at least we will get a reaction. reaction. Now, May caused some volatility, but it ultimately recovered, so I really wouldn't trip out about it too much. And then, like I'm saying here, I am going both ways, but now here's a little thing to look for tomorrow. This is a list right now of companies with some of the highest operating margins, and these are usually the high CPI inflation winners. So I also made a play on Coinbase. I also was looking at crypto after all of the CPI releases, especially around May and times before that. That is what played out. And again, the question about tomorrow and what is going to give a market reaction is, does this trend of inflation keep going up? People want to see the chart turn where it starts to level out. That's what we were hopeful of early in the year, but it didn't happen. So as long as it keeps hitting new highs, that is where people's imaginations run. You're going to start hearing people talk about it. So anything could happen, and that's why it's being able to position both ways. And now if we're talking even inflation or taper tantrum, these are some of the winners, the ones with the high operating margins. So here's the list. I mean, it has everything from like Adobe, middle of the pack, all the way to Visa, Moderna, VeriSign. Those are the ones leading the way. Again, IBM, you've been seeing them go crazy. I mean, Broadcom, they just had earnings, and we just got an update on their margin as well too. Even Abivi, Public Storage, and now just really ask yourself in the last few days, go look at some of these charts and you'll notice these have been the ones leading, because regardless of inflation, the ones with the good operating margin, those are going to be the ones that are safe, or that's where people are going to want to put their money. So keep your eyes out for any of these high margin names tomorrow. It is most likely going to be down again out of our 10 data points. It could end up being a small move. I am positioning for both things, and now these are coming into the plays that I made today. We made quite a few. I did make a flip in the morning. We grabbed Restoration Hardware. That one was a post-earnings play, and we actually hit it nice. And I grabbed two of the February 7:30 calls for $1,700 a pop. A little bit expensive there, but then I sold them out about 15, 20 minutes later. $2,200 a pop. Got to realize $1,000. I only meant to sell one, but then I was really tired in the morning. I fat fingered it. It sold two, but ended up working out in my favor. And then this morning, I trimmed some of my call positions. Those apples, we were holding them. They were up 130% or something. We bought these at 50 cents. I sold 10 of them out at $1.21, got like a $700 profit. And then I went and I bought a short-term Apple put. It was a little cheap there. I only got one for $100, and you'll see what I started to do here, because remember, I have older puts that I'm holding, but I'm also in some call plays, but I did trim down some of the positions. I think at this point, I'm a little bit more weighted to the put side, but given the timing on some of these, a lot of the plays that I'm using and kind of setting up for is I'm just keeping Powell in mind that some of these plays will still be alive. And then over the last couple days, a lot of the calls have been moving. I've got to take profits on them, and then I also do have some bigger share positions as well that I'm able to profit off of if we do get upside, which you guys have been able to see on this account. That's like the Roblox, the Coinbase, and even the SAM shares that I'm down on. So the same thing applies as well to the Robinhood account, but you can see I'm going both ways. I grabbed that Apple put, and then there was a piece of Snap news, and this is some of the plays that I'm holding towards the call side. Again, Snapchat was already running up the last few days. I got to play this with news. There was an announcement by Kim Kardashian and her mom that they're partnering with Snap, or they're doing some promotion. It sent the stock up. I was thinking back in the day when Kylie clapped the stock, I was like, well, the Kardashians may move it, but the best part was, even after this run up, these calls were the same price as a couple days ago, and even last week, again, Snap was beaten down. So they are risky because they don't have as much time, but if we do get any sort of upside bounce even after tomorrow or Powell, I'm sure these would be able to do some work. So I grabbed 10 of the 70s, $50 a pop, spent $500, and then we waited, and then middle of the day, this is where I decided to add to the puts. I was watching the premiums, and remember, I have these two SPY puts. I grabbed these the other day, and remember, I held these for 2 or 3 days of the SPY going up, and I lost 30%. So from the rally, and when we got them, I got them on, I think, Tuesday or Monday, actually. Here, let me double check so you could see. We got them on the 7th there, so that was Tuesday. Yeah, it was right here during that little pump, and then it went up. We were down a little bit. Then yesterday, I was down 20% on them, and then even today, they were down even more, but these plays started to come back up faster than those Tesla puts, and remember, that was the one I was up on. I didn't take it, but this one's still able to hold in the game there. I'm definitely not up the same 100% that I was, but these were coming back a little bit slower, so we were listening to the press conference and today, and that's when they started kind of giving us a warning on inflation. I was like, all right, this is kind of weird here. So I did decide to get a couple puts, and that's really when the market started getting antsy. It seems like as we got towards the end of the day, we're coming towards the final chance to move. Again, CPI is going to be coming out 5 5:30 in the morning. They're starting to already talk about some of the numbers. It was kind of spooking people a little bit, and people were like, well, I guess it started to click with people that tomorrow's CPI is probably going to come in really hot. So I decided to make an IWM play. This one's pretty big. I bought 10 of the 189s for $1.40 each. They even went up about 50% or 15% coming into the close, and then I sold that Microsoft near the money. Remember, I still have another play. That was the one I was down on, and I averaged down to this Microsoft. Where is it? Right here. If you remember, we're down on the 355 one or the 390, and this one even dropped even more, but this one was down 30%. It wasn't really moving. It gave us call side exposure. I averaged down, but this play wasn't moving. I was up 8%. I took a small gain, closed out of that one, and then I sold my Chewy and Costco's. This was a loss. We only lost $80 on the Costco. We were down way more at one point, so the earnings helped, and then I lost another like 25 or 27% on Chewy. So it was like $280 or so, and then remember, we made the Lulu, so out of the 3 earnings run-up plays, one of them hit, but that one gave us a little bit more profit. And then towards the close, just because I have those big shares, and this is what I'm saying here, to kind of play anything going on and I want to take advantage of it, or at least how my portfolio is set up to gain on both sides, I could pretty much play these profits. As long as I'm taking profits here, I could let some of the shares work, and then we could add to the cash balance. But I've decided to go with some Roblo puts. I got 10 of the 85 ones for $1.55, and then 2 of the 90s for $2.36. These ones went up a lot. I mean, if they go down, my plan is to get more with time. Pretty much protecting that one position. We've already lost a little bit, and we have some of those plays, but we still got a lot more gains to protect on there. So I think it opens up a nice opportunity for me to trade some of the downside and protect. But those are the ones I decided to go with. And now coming into tomorrow, still holding those Tesla puts, got the IWMs and the SPYs, and then the old XLFs. I don't know if those came back because banks did good. The FXY, given what happened with China and Evergrande today, and even what China did with their currencies, this one may start to move a little bit. Oil, that one is down, but this is what I'm saying. These are some of the plays that even on the call side, we have some stuff like all the way down to Olma and the biotechs, and just these other ones like even MasterCard, that's a high margin play. We even have the old Oracles. This one is going to be a fire play tomorrow. I'm even going to look for a post-earnings continuation. So the idea is pretty much ride some of the calls that we're having, and then anything we've set up over the last weeks that we've been holding, these are what we're going to look to ride out. So there's even that NVIDIA from yesterday, lost 20% on that. I'm still holding that, but this is what I'm saying. I have call side exposure. I've balanced it out with the puts. I'm assuming there'll be enough volatility, or I'll be able to take advantage of some quick moves to take the profits out. And then as we swing into next week with Powell, whatever I'm not making money on this week, hopefully we're able to cash out of it next week. So that is pretty much it. Tomorrow's going to be a wild day as far as the plays I'm going to be watching. Oracle, I think it's going to be an awesome post-earnings continuation. I will be watching the Tesla with what we got and that one put. I don't know if I'm average, but essentially the puts are cheaper, and last time they were up a lot here, so that may help us out, but it all depends what happens there with the stock. And then CVS, just pay attention to the winners. Again, Oracle's a winner. Even Broadcom, AVGO, they are one of the high margin ones. They had good earnings today. We got that data. They may be able to lead in this market. Again, don't underestimate that fact. Depending on the type of volatility we get, you may see everything go down, but there will be winners, and just pay attention to the ones that are, because they may drop, but they're not going to drop the same way, and those will probably be the ones to recover the fastest. So keep your eye on them. Facebook, going to be watching them. They were really strong this last couple days. They've kind of been a leader this week, so pay attention to how they play out. Again, Snap is kind of related. Then AMC, small caps, GME, and even AMC CEO sold out another 10 million of shares. They hit a little bit of a low there, I think, pre-market, but small caps and IWM, that's going to be one to focus on, and that's why I went with the IWM play. It was just like the SPY puts. Again, if I was down on those SPY puts, remember when I told you the logic of this play, I said the premiums were kind of low. It looked like they hit a floor. The idea was buying insurance when the house was on fire. That's essentially what I did here. If you go to the January puts on IWM, you'll notice these contracts, they moved a little bit less than the ones ahead of it, but then they're still holding their valuation, but they're just a lot cheaper than where they were going for during that volatility. So if we send it to the quick chart, you can see what I'm talking about here. Essentially at that $1.49 price that I got it at, that's where it was trading at yesterday. We had the market going down, we had the catalyst, but ever since all the volatility started, it was actually about cheaper or the same price. So I had all of the drama, everything that happened in the market going on, and I was able to buy the insurance for way less than when the house was on fire, if that makes sense. So gonna be watching them, but that's a reason why I got it. And then small caps are usually the ones with less insurance sometimes. So pretty much a lot of people are prone to flock to the S&P. And just take a look here on the 100-day versus the S&P. You see an upward trajectory. IWM hasn't pretty much done anything. It's kind of like the Japanese yen. So the premiums are actually surprisingly cheaper because it just really hasn't moved. So keep your eye on them. It's going to be a good one to watch during volatility. And then AVGO, and then Lulu, they had post earnings. Watch them. I mean, I want to see how it plays, but it was a little bit of a pop and drop. Their earnings was great, but it looks like the market may be able to overpower it. So watch out for that. And then Roblox and Snap, like we said. And then finally, TLT, if the CPI is high, you're probably going to see the yield shoot up if it's a surpriser, but be careful for a pop and lock. That's what I'm going to watch for. I don't have any plays on it except the old ones, but essentially, I'm going to watch the initial reaction and just get ready for a midday reversal, but it looks like it should be going up, but we will find out. It very well could level out, or tomorrow could produce a 1 or 2 day effect, and then it'll settle right before we get into Powell, or if it is really that crazy, the higher it goes above expectations, the more likely you're going to see volatility, so it's going to be exciting, and I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need your remember. Don't forget that king character, baby. But Nicole loves you. I love you. And we'll see you in the morning. Let's go.